Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Tuesday's morning call. We walk in today where things almost look like yesterday, right? Yesterday, the futures are down about 12 to 15 handles. Question was, would we be able to absorb the down move considering the size of the gains we had on Friday of last week with the pension buys and the window dressing? And market did a decent job of it, maybe giving a tiny bit of a false sense of security because it also absorbed weaker oil and the fact that oscillators were getting a bit overbought. So the question is, can it do it today? Overseas, you have Asia kind of mixed. The Nikkei is off 0.5%, but it was up 5. So the question is, are the BOJ negative rates, was that it? Was that the rally for that? And now people realize that that's not really a great thing. And then in Asia, you have the Shanghai up 2%, but it seems like it's controlled because they're trying to get them in a decent mood for their holiday. But anyway, I'm sure everyone read those stories about all the hedge funds betting against the yuan. So if they happen to do that overnight devaluation again, volatility is going to rise. So, the question is, what do we do now? Because you have two different types of trends going on. You have a micro trend, which is the trend or the reversal rally that started that Wednesday, January 20th, that we're not sure how much further it can go. And then you have the intermediate macro trend that seems broken. So you're trying to figure out when does it meet in the middle, and that's, I guess, our job to do. So if you take a quick look at the chart of the SPX, what I'm talking about is pretty much the macro trend or intermediate trend basically broke right around here when all the technical started to deteriorate, and we lost all the moving averages. So down here is where after a big move off the highs, 10-12% or so, you had your reversal low when it undercut the 2016 lows, went back to the 2014 low, your higher low, and then you had this consolidation type wedge pattern to give you another move. So if we look at this scenario a little bit closer, to get your points of reference, you will see that the question is, how much further can the bounce back go? Yesterday, the bulls put in, a decent fight by holding this spot right here. Okay, this spot right now is 1920, okay, as the 8 days starting to move up, it's trying to stay above the 21 days. So if it were to hold this again, that would probably give a little bit more confidence for the bulls that perhaps, yesterday's high is not the high and that we could see, perhaps a move to retest this broken area, which comes in around, almost 1990, and then you also have a spot here, which is like 1960. So, you're going to have that question of, can it continue higher or was that it? So, one way to go about it is, 1920, or there's a push below 1920, retest. Maybe I talk about 1916. This was a bad line here, but that's because this is that high right there. Okay, so maybe it pushes below, stops some people out, holds this, comes back up and creates another type of choppy consolidation where we'll get to figure out what's next. So as of today, I guess we'll see. The problem is oil right now. Oil is flirting with 30 again. So the question is, does it hold it? It just pulled back from, I think, almost 35. Some people are looking at this today, which if you want to look at it, that's fine. This is the reverse oil, okay? A lot of guys caught a nice move from this parabolic move from 480 down to 220. That's 200 points in the middle. And now from 225 to 294, and now it's coming into this 320-ish. Some think maybe you could short against that, if oil holds 30. So if it holds 30, maybe, you can find a 15, 30-minute, short versus this. But just be very careful. A lot of people, got their clocks cleaned and put out of business during that run. But as of right now, maybe it's worth a look if they want to come out and try and save oil around 30. For a day or two. So just for a trade or so. And David Green is really good at trading the DWTI and some of those, ETFs with oil besides most other things. So just like the spiders, most sectors did hold a little bit higher. So if you take a look at a few of them, kind of do it again. So, in my morning note in Redler All Access, all I did is say, make it simple. Can we hold above yesterday's low or not? Or do we push below? Stay below, and then that's that, or do we push below, come back above, and create another flag type pattern? So the XLF, which Barron says it's the time to buy the banks, I guess it wasn't yesterday, right down 2147. And the Qs, which has been one of the strongest sectors out there, actually went green yesterday. Same kind of thing here. Can it hold this spot and go sideways and take back the 21-day and retrace higher? So that's your spot for today. If you come in flat, you could buy versus and figure it out, or see how it plays with that pivot. Then you have the Russell, which kind of nothing great here. It seems like it's trying, but it's so darn choppy. It's been really broken. This was that move on Friday. It did hold a bit higher yesterday, but gave back a majority of the day. See if that's the case again. That's 101.25. So see if it holds it. If it doesn't and breaks below, get out of it. If it comes back above it and you want to buy it with a stop versus today's low, be my guess. But all in all, very hard. This sector has been so broken. You take more of a macro look here, and it loves to trade with these ascending channels and break. And it's done it quite a few times. Up here, then this ascending channel here, and then this bear flag here. Then it broke support here. It's below every moving average, et cetera, et cetera. So, it did get to target 1 for the bounce, which was into the 21-day. The question is, kind of work its way a little bit higher before meeting excessive pressure, which we'll find out. The bios have been very weak, except for yesterday. It showed a little bit of relative strength. So this is the same thing. You want to see about broken sectors. Look at this trend that was broken. Look at the size of that wide range bar. Did it again right here. Look at the size of that wide range bar. Then did it again here. And now it's really not doing much on a macro sense right there. So at this point, it did give you a green bar, which doesn't mean much. So I guess if you're in it long, make sure it holds this spot, and maybe tries to go from red to green today for a trade. But ultimately, I remember trying to have it play some catch up here, and thank goodness it was just a small loss, because it wound up being the first sector to make new lows below this. And now the question is, does it stay below it? So we'll see. As far as individual stocks, Google had earnings yesterday, very strong earnings report. Question is, is it going to pull a Facebook and give you some few days of follow through, or is it going to pull a Netflix where it doesn't hold the momentum level? So this time, the jury is sort of out. It is still above 800 right now. So if you happen to have bought it yesterday when it went above 800, it did go to 840, which was a big move. And if you shorted it at 840, you made some money too. But anyway, it has to hold this point. If it does not hold this spot, which is, what is that, 798-ish, be careful. If it puts a high in of 810 and breaks below this and you want to short versus 810, try it. If it comes in to 795, comes back to 800, you want to buy it versus that for a move to where it was after hours, you could try that too. But let it breathe a little bit. But this is like the don't pass line, almost like in craps, which I don't play, so it's probably different. But this is the spot. As far as other stocks that already had earnings, Amazon had earnings, didn't react well. It's kind of in the penalty box. It's below the earnings gap still. So question is, does it hold this what is this? This is 570. If it were to break this 570, maybe some shorts come in for a move back down to the 2016 lows. Here is your earnings gap. So this is your new little range here. The question is, does it hold this to then fill it, or does it stay down here and continue lower? So it's lost momentum. It's in the penalty box. So either trade it less or just know your levels. Netflix is up a little bit. Was upgraded yesterday. Was a nice surprise. It held 90. There was some news or rumors that Apple might do something with them, and gave you a quick little trade for the morning before fading. So now the question is, it's up a little bit this morning with futures down. Here is your support. Can it reclaim the 200-day moving average or not? This is your first resistance spot. So see if it could, I guess, reclaim this and push higher, or does it get rejected? I think Cantor put a 122 price target on it. The enthusiasm wasn't about an upgrade. It was more about whether someone was going to come in there. Ultimately, the stock's been broken for a little while. If you do remember this outside day right here at the highs, and then kind of like I want to make sure in Google, it did look as if had decent report and it was going to take out this 116 and failed. And since then, it's been for sale. So now figure out if it's buyable or not. I'm probably going to stay away, but I might. We'll see. I'll watch it. Tesla also started off negative on a downgrade, but there was some news that Musk exercised some options and gave you a nice reversal trade and gave you a few different entries throughout the course of the day. So the question is, it's off 2-3 points this morning. I'm going to look there. Maybe futures go lower, it shows a little relative strength, it tries to go green for a trade. That could be some cash flow. But the real fireworks are until earnings come out, and I think that's next week. But ultimately, every now and then it can run if it wants to. And I guess having some confidence from Musk, exercising more options was there. That was your spot. Decent trade into, some resistance. So if it really wanted to continue, well, first of all, it's been rejected by the 8-day for pretty much the whole year. So first time was able to poke its nose above it. So now I would see, can it hold this, just say 194-ish area, and then take this out and see the 21-day, which, again, these aren't blockbuster type trades. It's just, it is what it is. This is what, the market we're in right now if you're trying to rub a few shekels together. Not everything could be like Facebook. I was talking to Louis yesterday, who likes to buy the strongest stocks and the best trends, and we had a great trade with that. I didn't play it the day of earnings. The day after, you were able to buy it at 109, add to it through 110.60, the all-time high, and then stay with it. So I sold mine yesterday, I don't know, somewhere close to 115, and I was just like, Louis, are there any other stocks like this right now? I was like, not really, especially in tech. But anyway, it's good when something like this could happen. But again, you have to take a little care. Look at the size of the move from here. You had your gap up after earnings. You could have bought versus that gap. Then you had a down day Friday. You could have bought that and then bought more when it took out the earnings high. And then look at the move it's had. It's extended from everything. So take a little care. It's off a little bit this morning. Some people think maybe you can get a red dog reversal where it pushes through 1572, squeezes a little bit more, then comes back down and makes a bit of a doji or a topping tail. We'll see. The past few sessions I've been keying on it and buying more while it was red to green. Today I think I'm going to be a little bit more careful just because of the size of the move that it had. So I might not trade this as actively as I have since Friday. But ultimately, as long as it stays above this spot, very, very strong. I'd be very surprised even if you were able to buy it much below this spot. So we'll see. Maybe it does a few inside days and puts together a bull flag there. Sperling was all over LinkedIn. I put it in my note also yesterday saying that perhaps you get your first 2-day move, and you did. Earnings are, in a bit, so they might have a little bit more time to maybe go from, red to green and push through this, but I'd be a bit more careful considering where it came from. Very tricky stock, but your next resistance really is until here, so maybe that's something today. Twitter, Silver Lake was, spoken about taking an interest in them, and they said no. It also was downgraded to a sell today, so it's off this morning. Stock has been very broken for a long time. It's had some flashes where it looked good, and then remember that mess up right there when earnings came out early, or this mess up here when they upped their guidance, and then met the guidance, and then pre-warned. That was a horrendous spot. So this was really the last time I traded Twitter. I haven't traded Twitter in such a long time, ever since breaking this yesterday. There was a small trade there, as it opened up, held, and continued before the news came that there was no interest there. I guess if you had to look at it, maybe look at it versus, this little spot right here. But again, it's such an downtrend. The best times to buy it is when it makes new lows, because then it looks cheaper for someone to come in there. Fundamentally, though, they've been switching around their executives, and they haven't been able to monetize much. And maybe as we get closer to earnings, there could be something to look at there. But I would just either use a 5-minute chart or just avoid it. Gold made a new 2016 high yesterday, and is off a little bit. It's been in a really nice trend since breaking, actually since here. It broke above this pattern, came back, I guess, shook some people out, and then it's been following the 8-day pretty much for most of, of 2016. So the question is, does it hold this gap and make it easy for the longs, or does it come back in and retest the 8-day? But all in all, this 8-day is now the new trend with the 21-day. 200 days right here, and I would think it would kiss it at some point, and the bugs would love it to take it out with some force. I think you got to take what you can get. You look on a macro sense at gold, and it's still, I wouldn't get too excited. It's just coming back up to its downtrend, and I've talked about gold many times. I used to be very active in it when it was in this trend to the upside, but then remember it broke right here. You had a wedge on top of a trend break and losing the 200-day. That was your out in gold. If you didn't get out there, it was here. I remember this. Oh, we were long puts. That was such a great trade. And now, since here, it's really been just trapped. And it's still trapped. It's been like a 2-3 year bear market. So really, this is a nice counter trend trade that's failed for quite some time. So we'll see what happens this time around. Maybe the currency wars really start fighting and you get a better move and it continues higher. But at this point, it's coming into a trickier spot that it's going to really need to be that strong to prove that this can change. And all in all, like I said to start, we're about halfway through earnings season and earnings have not been great. I think they're down 4% on average year over year. JP Morgan said I think they've lowered their estimates that S&P earnings are going to be like $1.20 or something like that, or 120, 100. Yeah, I think that's what it is. And with the 16 PE of it, basically gives you 1900. So they're saying best case scenario 1900, 1940, unless something materially changes, is at a 16 multiple is where we should be. We could be lower the next quarter or so if things continue to weaken, and when sentiment goes, usually you don't even have that PE. So into this 1940 to 1970, 80, they think that it could, it's just fadeable that vanilla selling, meaning mutual fund selling, will sell. So just take care that you don't get caught in the hype of the counter trend rally to the upside. Or if you think that we have to fail, don't start shorting too early and not be able to handle it, because the market does push further than anyone would think. They don't make it easy either which way. But at this point, you have some haves, have some have-nots, you have your tactics. I would only look to really trade in compelling spots. Sometimes the hardest thing to do is just sit and do nothing, but sometimes sitting and do nothing is better than doing bad trades. And we'll figure out what's next. We're not oversold, we're more overbought, so you have to work that off. And we're still, off that Wednesday low, they're still coming in and buying dips, and you could trade around the positions. So we'll do that until something changes again. I think watch oil today, see if it holds 30, and watch yesterday's lows to see if they stay intact. And if both don't happen, chances are you could see some more downside before testing yesterday's high in the S&P. Have a good day. I'll see you at the recap.